But in the meantime, let me introduce our guest this evening, Amit Kumar Gupta. Amit is the founder of FinTech Capital, and he's got over 2 decades of experience in investment analysis and portfolio management. And he was responsible for setting up the research desk at the PMS firm Adroit Financial. Thank you so much for joining us today, Amit. Really a delight to have you join us, Stockwits and Business Insider India, on this discussion.
Thanks for inviting me. Great to be here.
Before we start talking about the markets, you are somebody who's a proponent of the scuttlebutt method of thinking. Do you want to tell us a little bit more about this style of thinking when it comes to investments?
Yeah, right. Scuttlebutt basically deals with, analyzing your investments based on what you see on the ground. So when you are analyzing the company, you're analyzing any trend, you like to see the proof of it on the ground. So you talk to a lot of people in the whole value ecosystem. So whether it is suppliers, whether it is ex-employees, whether it is vendors, you talk to them and then make a investment thesis and invest according to that.
Lovely. And do you find that especially lacking given the time and age when people tend to go towards Twitter and perhaps Telegram for all their stock tips and advices? How much of that how much of that do you see? I mean, we see quite a bit of it when people start pinging us and saying that, hey, should we go this way? Should we go that way? Just waiting for a quick tip to go about, which seems to be directly in the polar opposite of the way you seem to do your research.
So I believe that in investment, especially if you are a long-term investor, then you need to develop your own convictions, and that conviction cannot be just made through reading on Twitter or social media or just reading the annual reports. That needs to come from a certain basic way of looking at the markets and looking at the economy. I feel that the way of us analyzing through the scuttlebutt, that helps us to develop more conviction in the investment thesis of why we are investing in a particular sector or a particular stock. And that holds well for us, if we are holding a position for, let's say, 3 to 5 years.
Got it. Well, lovely. I mean, we've got Yash in as well. Yash, give us a quick sound check so that we know that you are loud, clear, and noisy.
All clear. Thank you. I can hear you. Good evening, Amit.
Good
Excellent.
evening, Yash.
Lovely. Let's get started. Amit, July has been pretty decent and not too bad a start for August as well. Do you suspect that there is some stability in the markets after the turmoil in the past few months?
Yeah, I think there was a lot of pessimism in the market about a month ago, thanks to the inflation and the recession worries. Now we seems to go to the other extreme with FIs coming back and buying into the Indian markets. So I believe there is a sort of a complacency which is permeating right now in the market narrative. So I think we will find a equilibrium. Next 3 to 6 months may be very volatile on both sides. But we'll find a equilibrium, which will be very interesting to watch in the coming weeks. I mean, if you like talk about specific, currently how we are placed, I think the upside could be limited in very, very short term, given, we have almost risen 12-13% since mid-June. The
Yeah.
valuations have, sort of inched above the fair value zone. So, and the external environment hasn't really changed. It has improved a little bit with the crude coming down, the commodities coming down. But I think overall the environment hasn't really changed. So valuations is still a little bit of a concern. But I believe that markets will continue to reward certain individual stocks in a disproportionate manner, and we are seeing that in the earnings which are coming, something which are where the earnings are really good, above expectations. We are seeing a strong price action in those stocks also. So I think we need to probably concentrate on those stocks which are going to deliver growth irrespective of the macro situation. That's a sort of a theme for the next 3 to 6 months.
Awesome. Amit, I want to just take this conversation away from D Street for one moment and talk about the Main Street. We know that in India, at least the inflation is not as bad as it is in US and in other Western economies. Our latest GST collection, manufacturing PMI index data also suggests that the economy is pretty much doing well. Do you think India would come out of this entire global disruption unscathed, or even stronger, or we're just probably not there yet and we could see some pain in the future?
So I think India is not going to decouple from whatever is happening in globally. We are going to definitely have a sort of a recession in Europe, given what is happening with the Russia-Ukraine situation, and I don't think that is going to sort out in the next 3 to 4 months. Exporters, especially with the respect of capital goods and auto ancillaries, they are going to struggle a little bit, as far as earnings are concerned. But we might decouple in that sense that if US goes up 5%, we might goes up 7 to 10%, and similarly, if they go down, we might go down a little less in that sense. So I overall, I'm still positive, but I think the global headwinds will stay for the next few months, and that will give us the opportunity to adjust portfolios further. And hopefully by that, the tailwinds which you are talking about, the GST collections, the inflation, remaining down, commodity prices remaining down, those will help in earnings of the companies.
All right. There's a very lovely quote you shared from a very famous trader, Alexander Edler, that it is hard enough to know what the market is going to do. If you don't know what you are going to do, then the game is lost. So, in that context, what is it that you are doing right now, Amit?
So I think we have identified.
Are you buying right now, or are you staying away?
No, we have been actually buying since the March, April, not March, but yeah, April and May onwards. We have been buying, so we are sort of fully invested at this point of time. What I believe is, I mean, you need to be clear about your investment strategy and how you are looking at the markets. So even though the macro headwinds will continue to remain, we feel that there are going to be certain stocks or certain sectors which will deliver earnings over the next 1 year, 2 year, 3 year kind of a time horizon. So identifying those names and staying with those names, that will be the way forward. Obviously, not everything will work in one go. There will be cycles in the market, and wherever we feel that earnings may not come, we are slowly exiting that a portion of the portfolio. But yeah, overall, we are fully invested into the markets.
Lovely. I mean, we want to do a little bit of sector-specific talking now. But before that, Yash and myself, we will look forward to receiving your DMs. If there's something that you'd like us to chat with Amit about, send Yash or myself a DM with what you'd like us to ask, and we will bubble that up in the conversation right now. Um, uh, Amit, sector specific, there's been some amount of bullishness, coming in the banking space, and several voices are anticipating more headroom for growth. How are you evaluating the banking sector right now?
So, I mean, in general, we are very bullish on the entire banking space or the financial space. I think our view is that we are entering sort of a dream phase in this financials for multiple reasons. A lot of the stars are basically getting aligned for the financial sector. Firstly, there has been an underperformance for the financial sector. The FIs have been heavy sellers in this sectors. So, the price action hasn't really given us the stock returns which we were expecting. But what is happening now is that the credit costs are getting normalized much faster than, we would have anticipated, not just for like PSU banks, but even for the private sector banks. So that credit normalization is happening very fast. Secondly, the loan growth is coming back. So as the interest rates goes up, initially, most banks will end up having a higher margin because your liability gets repriced with a lag and your assets gets repriced immediately. So I think we'll see better profitability plus growth coming back. And then the after the 2018 NBFC crisis, now that the major threat from the NBFCs to these banks are basically gone. So most of the NBFCs are basically struggling for whatever reasons. They have their own challenges, barring couple of the top ones. So the competition for banks has reduced significantly. So I think for the next 2 to 3 years, this could be a golden phase for the banks. So within that financial baskets, we have positions. Now one can argue which bank is better than other, but I think all of them will do well over the next 2 to 3 years period. So you pick your stock and just stay put for next few years. There is a lot of money to be made in the banks.
Got that. Thanks for that, Amit. Yash?
I just have a follow up on this, Amit. By any chance, does your preference or list of banking stocks also include PSU banks?
It does. It does. So I'll go with the large caps, not necessarily distinguish between a PSU bank and a private bank. So I feel the larger the bank, the better is the ability to garner deposits because of the branch networks as costs are low and the ability to price loans and not really get into the riskier bets. Moreover, these banks have provided so much in the past quarters that there is no major scene of NPAs coming across at least in the next 2 to 3 years unless we get a real shock. So I would say most of the large caps, which includes a few PSU banks and a few of the private banks. I mean, usually in this cycle, the larger alpha is made by the mid and the small caps. Uh, but I will be very, very selective in that space, and I would concentrate more on the large caps, both private and the PSUs. The majority of the portfolio, I may take a couple of bets just to increase the alpha of the portfolio.
All right, so that's the take on the PSU bank space. Amit, I want your thoughts coming in on the real estate sector. It was one of the most beaten up space besides some of the other sectors in the recent few months. Uh, Even though we are seeing record registrations and demand continues to remain healthy, what is your hot take on the sector and which companies do you like the most within this space?
So I think in real estate, what happened the market was rightly worried about multiple things. One was the increase in the increase in the interest rates. Secondly, the commodity rise, which happened because of the Russia-Ukraine war, that became a sort of a worry for the markets. But I think given what we have seen in this quarter earnings so far from the companies, whichever have declared the results or at least given out the commentary of their quarterly business, there is not much worry in that sense from a long term perspective. Obviously, in the short term, a little bit of margin gets impacted, but the amount of bookings which are happening and amount of people who are looking to buy a home, I don't think it should be an issue. So the whole worry about the real estate cycle fizzling out, I think that is out of the window now. And we have sort of divided our exposure to real estate into developers and the building materials. So we are interest. We are invested in a couple of real estate developers. One from the Delhi NCR and another one is from Bangalore. Uh, and apart from that, we are also invested in few of the building material companies, and we are also evaluating few others. So this whole sector, real estate and ancillaries, that is close to 20-25% of our overall portfolio.
Thanks for that, Amit. Quick focus on FMCG. India's performance, when you're looking at the other emerging markets, has been pretty all right. Is it safe to look at and say that FMCG is likely to hold on well, for the at least for the near future?
I mean, the valuations are not cheap anymore. Obviously, the global growth slows down, the commodity prices goes down, and the FMCGs get sort of advantage for that, because once they sort of cut volume of the any of the products, they are unlikely to go back to the original you know original volumes. So I think one has to be careful of how much you want to pay into these FMCG companies. I still prefer discretionary consumption rather than FMCG staples. But I think they have done well over the last while. We don't have so much of exposure into the expensive FMCG names. We are more into the discretionary space. So whether it is liquor or whether it is QSR space, we are more interested in playing out the consumption according to those themes.
All right. Um, Amit, autos in general have been in top gear, except for one name that stands out, which is Tata Motors. And the stock is down about 10 or 11 odd percent on a year-to-date basis, versus the Nifty Auto Index, which is up about 12% in that same period. What really explains this underperformance?
So, Tata Motors in general have been a very complex business. It has been a very complex business. So, you'll have a domestic business, but the majority of the revenues comes from the JLR. And then in JLR, you have another 60-70% of the revenues coming from China. And China is a sort of a black box with the COVID restrictions happening. With the You don't know exactly how much growth is going to come from the China, so it's very difficult to price in that growth into the stock market. I think, and again, then the JLR has a business in Europe also, which is also now struggling. Uh, so I think a combination of all these factors is sort of making underperformance in Tata Motors. I know, they have set their eyes on the EV portion, and they've got a good valuation for their EV part recently. But these are futuristic things. Eventually, how much they are going to make money out of the JLR, that is going to define the returns in the short term. So I think the market is right in sort of pricing in the worries for Tata Motors in short term, and we have to see how they are going to overcome that.
All right.
Thanks for that, Amit. Also, a quick reminder to all those of you listening in. Once again, thanks for joining us for this Spaces between, brought to you by StockBits and BI India. And if you've got anything that you'd like us to bubble up into this conversation, drop Yash or me a DM, and we'll bring it up.
So Virag has been promoted to speaker, Ashwin. Let's quickly take in a question from him.
Hey, Virag.
Yeah. Virag, go ahead and unmute yourself and you can ask Amit the question.
Yeah, hello. Can you
Don't
guys
think
hear me?
Virag's or it's not appearing on my
Hello.
screen. Perhaps the moderator could re-promote Virag as a speaker, please.
Yeah,
Hello,
I
guys. Can
can
you hear
hear
me?
him. Yeah, I can.
So yeah, I wanted to understand one thing on inflation and rate hike cycle. So what do you think about? Do you think that the inflation and the rate hike cycle is behind us now? And we have also seen a good bounce back from the low levels of Nifty. We are up 12 to 15% out of Nifty levels. So what do you think that it's been priced in and we are behind of inflation and rate hike cycle?
So I think I got the first part of the question, which is about the inflation and the rate cycle. So I believe that the market is pricing in that Fed is going to, do probably a couple of more rate hikes and then stop. I'm not sure that is the right conclusion as of now. Eventually, the commentary which is coming in the last 3-4 days, that shows that Fed does not want to be too dovish, and Fed does not want to put a timeline to the rate cycle yet. So we might see a lot of volatility as far as the rate cycle is concerned. So I am not in the camp which says that rate cycle is done, rate hike cycle is done. even though the bond market is pricing in a rate cut by March 2023, I think there is a lot of water to be crossed before we actually, go through that bridge. So it's a dynamic sort of an environment currently. I think in the next couple of meetings, Fed meetings, we are going to understand, how the inflation is coming along, whether we are going to get a little bit of lower inflation, and that could put a sort of a top at the rate cycle for the Fed. And once the rate cycle for Fed is done, then I think you are going to see really aggressive FI flows coming into the Indian markets. So I think for me, it's still wait and watch. I think the sort of joker in the pack is the gas prices. What happens to the gas prices, as far as the Russia is concerned. So if Europe is not going to secure the gas supplies by mid of September before the winter starts, then I think that's going to be a real problem for the markets, and we can see some tantrum being thrown into the markets, and markets getting really worked up on that. So yeah.
Yeah, and I guess one of the Fed members had also said that interest rates may remain high for a fair bit of time before we start seeing an improvement over there, because how deeply embedded inflation is. So
Yeah.
rate cut cycle may not be something that you can see in the foreseeable future.
Yeah, so I don't think inflation is going to come down to 2% of what the Fed target is before mid of, let's say, 2023. But I think market will price in the terminal value of rates, once it happens. Whether it's going to be 3.5% or a little more than that, I don't know as of now. We have to see. It's a sort of a wait and watch as far as the Fed commentary is concerned. Uh, but the hope is that in the next 6 months or so, we are going to get a terminal value of the rate, and hopefully the inflation will also come down a little bit. So that will help the Fed take a call on stopping the rate hikes.
All right.
Yeah, right. Okay, that was very insightful.
Do
I
we have
have
a
a follow-up
follow-on?
question. Yeah, I have one follow-on question. It's a short one. So I belong to the camp that interest rate and inflation are behind us. And if you think
Yes, do we have a
otherwise,
follow-on from on the question?
hello, am I audible, guys?
All right. I guess there is some background disturbance in Virag's audio. Ashwin, why don't you go ahead? Ashwin, can you hear me? Okay, I'm not sure if anyone can hear me. Amit, am I audible?
Yeah, I can hear you.
All right, so I guess there is some issue with
I'm
Ashwin's
back
connection.
alive as long as I'm audible. Am I audible?
Yes, you are. Yes,
Well,
you are.
that's normal for the day when it comes to Twitter Spaces. Do we? I presume we don't have a follow-on question. So coming back, Amit, pharma as a space. Your thoughts here? There's huge global linkages that play out, especially in the sector. How do you see the space panning out internally?
So I mean, pharma in general, there is pharma and there is healthcare. So pharma, I think, as far as a lot of these US based generic businesses are concerned, they are facing a lot of headwinds in terms of pricing. So I think that may continue for some more time. Uh, and as far as some of the headwinds from like these API pharmas which were coming from China, like the power cost and raw material cost, that is sort of ebbed at this point of time. So we are not very bullish on the overall pharma space. We are more invested currently into the healthcare space because we feel that something like a hospital space, they will be pretty much aloof from the rate hike cycles, and they generally tend to do well in this kind of scenarios. We have made marked our territory on where we want to bet within this space, which is more towards healthcare rather than the pharma space. But the valuations are becoming much more cheaper in the pharma space, and there has been now a time correction also of more than 12 to 15 months. There could be opportunities which we might include in the portfolios. As of now, nothing, but yeah, maybe going forward we will.
Copy that. Thanks for that, Amit.
Rahul, you've been promoted to speaker. Go ahead and unmute yourself. Rahul, can you hear us? I hope you've logged in from your phone and not your laptop, because otherwise you won't be able to ask the question and just hear us talk.
Which is not a bad thing as well, but still.
Yeah,
Rahul, you
in which
unmuted
case,
yourself and you muted yourself again.
yeah, I mean, just to clarify, in that case, we would go ahead with the other questions and the conversation. Okay, I think there is some issue on Rahul's end. Anyways, Amit, I have one question on the specialty chemical space. Obviously, it is one sector which has been the darling of Dalal Street for the past several months. Recently, the earnings haven't been that great, margin pressure, but now we're starting to see some improvement trickle in. Do you like this space by any chance?
So we used to own specialty chemicals for good 4 or 5 years in between. We currently hold a couple of specialty chemicals. Luckily, they worked well for us in the last 12 months. One of them was a special situation involving a demerger. Uh, but overall, I think the sometime last year, September, October, the valuations really got out of whack, and with the headwinds which were coming along from China, etc. I think it made sense to sort of exit all that, all that. Uh, but with the PLI schemes and the China Plus One schemes, I think this space is going to make a comeback. Probably not immediately, but I feel probably couple of quarter of earnings we have to see to understand how they are dealing with the headwinds. Uh, and there could be opportunities again coming back into the space, but one has to be very selective because I don't think this will be a broad rally like what we saw in 2020-21. So one has to
Right.
be selective in picking up stocks. Uh, but yeah, there are opportunities.
For that, Amit. We've got a bunch of audience questions coming in as well, and we'll get to that. But I have one final thing that I want you to, wanted to pick your brains on. Telecom and 5G. I mean, some seriously big money is being committed by by the companies out there. How do you see the space playing out? And also, do you expect some, consumer level hikes coming in to help pay this tab?
So I think they are expecting. I mean, they are probably launching a 5G in at least Delhi and Bombay by January. So January 2023. So I expect some sort of a rate. I mean, tariff hike coming in sometime in November, December. I think it makes sense to have that hike. We haven't had a tariff hike for almost a year now. So somebody has to pick up the tab. So in this case is going to be the consumer who is going to pick up the tab, and we will are going to see some sort of a tariff hike towards the year end. 5G will be good for the economy and for more penetration into the markets for the consumer. But yeah, consumer have to pick up the tab for that tariff.
Lovely. Thanks for that. That ends my roster of bits that I wanted to chat with you with. I think we've got a bunch of themes coming in from our listeners. Yash, over to you.
Yeah, Amit, we've received a comment from Harsh Parekh. He wants to know your view on IT and whether it can outperform the financial sector, or should you just stick to banks and NBFCs?
So at this point in time, we are overweight on financials. And we are underweight on IT. We are not completely out of it, but we are underweight on IT. We don't. I mean, given the how the earnings have panned out in this quarter so far, I don't think we are going to. A lot of questions are still answered, whether it's wage hikes or whether it terms of uh, margins which are going to get compressed. So demand is not an issue that we have seen from most of the commentary of the people of coming in from the IT sector. But whether that wage hike, the attrition issues, which is as high as 29% for some company like Infosys, we need to see how IT companies are handling into that. So maybe 1 quarter, 2 quarter, I don't know. And especially if we have to see how the growth pans out in US, because if there's going to be a recession in US, then that is going to impact the businesses which we are going to get from that space. So I think it's for me it's a more of a wait and watch in IT. I'm bullish from a medium to long term point of view, but sort of a neutral from short term point of view. So at this point of time, we are overweight on financials and underweight on IT.
I've got to ask you this. Over the last couple of weeks, we've been racking our brains about Zomato, and over the last 24 hours, it's moved in a different direction. What are you making of this stock?
So I mean, Zomato. Everybody knows the biggest issue for a sort of a traditional investor has been how to identify the capital allocation decisions. As Zomato has shown what people are referring to as adjusted IPTA, which sort of excludes your ESOP expenses and other expenses. But
Right.
the industry now has only two players, Swiggy and Zomato, and it needs to evolve over a period of time. Secondly, the recent acquisition of Blinkit, that is also an issue for me. The space is getting quite competitive now. Even Big Basket has entered the space. So, any correction in the stock has to do with a bit of reassurance that overall losses will come down. Whether they are going to come down or not, we don't know as of now with certainty. So they might get IPTA positive over the medium term. But I'm sort of slightly cautious on this, and as a disclosure, we don't have any positions also, because it's just 1 quarter's numbers. We have to see, how this is going to unfold. I do not rule out that in the case of Blinkit, all the losses will increase because it's a competitive space and it's evolving. So stock offers value for maybe traders, but for investors, I'm not sure. There are too many ups and downs and too much volatility as far as this is concerned. So as an investor, we are staying away from investing in Zomato.
Got it.
I'm going to go a bit 360, right from Zomato to ITC. Lots of tailwinds there, cigarette volumes. By the way, every single business is, firing on all cylinders. They are also talking about demerger of their hotels business. The stock is up good 42% on a year-to-date basis. Do you think it is too late, or can someone enter even at current levels?
I mean, I would say there are better opportunities than ITC.
Okay.
The good thing is they have shown some glimpses of getting rid of the non-core assets. So yesterday they have made an announcement of getting rid of the Wills Lifestyle, the retail business, into the market.
Yeah.
So I think there are some signs. I'm not sure that demerger of hotels is really on the card. There is a lot of noise about it on the social media. But I don't think that's going to happen in a jiffy and on a very short term point of view. So we have to see if they are going to do some capital allocation decisions which are going to be beneficial of the overall company. Then there is a chance of putting a position. But as of now, no. Another thing is I think which can be a worried maybe in some time was that the government of India can also come and sell their stake of the remaining stake, the Suti stake in ITC. So I think last time they sold it around 320, 330 kind of a levels. So we might see them coming back and selling their stake of ITC again into the markets. So that could be a sort of a overhang on the stock price in short term.
Amit, you mentioned that there are better opportunities. I'm curious to know whether
I was
you
exactly
meant
thinking the same thing.
whether you meant in the FMCG space itself, or by any chance the other names that we've possibly discussed earlier.
So as I said before, in the spaces that how you want to approach the consumption space, that is dependent. That's
Hmm.
how we are looking at. So we are more interested in the discretionary consumption. Now there are multiple ways of playing it. One is through a liquor stocks. Another one could be through the tourism. I think the tourism is coming back in a very big sense. I mean, there are hardly any. You'll get hardly any bookings if you do it at the last minute. At least not at reasonable prices. Uh, I
Absolutely.
mean, today morning I was discussing that there are three stock market holidays in August and
Okay.
five holidays for kids, school going kids. So I was checking some of the hotels and all are chock a block, and this is despite that monsoon is there and the roads are really bad in a bad shape. Still you're not getting the hotels. So I think this whole revenge tourism which is coming along after the COVID, this is going to stay for at least next 6 to 12 months. And I think there are interesting opportunities within that space, whether it is through you want to play it through a mid-tier hotels, or whether you want to play it through the aviation cycle, or whether you want to play it through the QSR space, the quick service restaurants. You have to pick your poison. But I think one needs to have some sort of an exposure if you want to tap into these kind of spaces. And this is, according to me, this can give a better return than investing something like a FMCG staple like ITC.
Awesome. You mentioned about revenge travel and revenge spending. PVR is also at an all-time high. How do you see this whole film distribution space? Is the whole theme about OTTs disrupting the space exaggerated and overblown?
No, I don't think it's overblown. I think OTT space has now firmly made its own mark, and there are going to be movies which you are not going to go to the theater to watch it. So I think uh, the theater watching experience will be limited to certain event films. Something like a Marvel or maybe a.
Which was the last movie you saw in a theater?
I saw the Marvel one, the Thor one.
Thor. Okay. Awesome.
So I think the limit. So the opportunities of people going out and enjoying with their family, and that is going to be more restricted towards the event movies. And you'll have your OTT space, which is going to be for much more niche kind of movies or something which you don't want to watch in the theaters. So if somebody wants to bet on that those 10 to 15 event movies in a year, that people going out and consuming that, then yes, it's a space to be invested and sort of be bullish about it. I am sort of neutral, so I don't really have a position in that space.
All right. We just have one last question. I've actually received a DM from Dr. Siddhant 21, aka Vigilant Dog. He wants to know your thoughts on what's happening between the whole Taiwan, China, US, crisis. Nancy Pelosi going over there, the first ever senior representative from a US government to visit Taiwan in 25 years.
So I think it's a little too early of what's going to happen. Right now, it's more like political posturing at this point of time. There is a 4 day sort of drills which is going to happen by China. So last time
Yeah,
that.
they're already underway, if I'm not
Yeah,
mistaken.
yeah,
I mean,
yeah. I think
yeah.
from Thursday the drills are starting. So
Okay.
I think the last time that such drills happened, market took it very lightly. In the case of Russia, when the drills happened in Belarus, uh, so I don't know whether
Hmm.
we are going to get a reaction, big reaction out of China or not. But as of now, I would pass it off as political posturing. But this is something which we have to keep a tab of whether it's going to accelerate or not. Because remember, the midterm elections are coming in November in US. So there could be a lot of political noise which will come on.
Yeah, and there is some bit of news coming from China as well. They've banned, I think, the export of sand to Taiwan, and apparently it's an important raw material used in chip and semiconductors. And as we all know, Taiwan produces almost 50% of all the chips that are used worldwide. So let's see how that situation pans out. But Mohammed Tokir has also been promoted to speaker. Mohammed, go ahead and unmute yourself. Just a small request, no stock specific questions, ideally. You're on mute, Mohammed, if you're trying to talk. Okay, I think he has dropped out. Uh, Also, we've got a request from Raj. Raj, go ahead and ask your question.
Hello.
Yeah, we can hear you.
Yes.
Go ahead.
सर मेरा क्वेश्चन है कि सर सपोज इफ द वॉर बिगिंस बिटवीन चाइना एंड ताइवान, कैन यू हियर मी?
Yeah.
We can hear you.
Yeah.
Please go ahead.
सर सपोज इफ द वॉर बिगिंस, देन सर ऑटो सेक्टर में सर क्या क्या इम्पैक्ट मुझे देखना पड़ सकता है सर?
सर अगर वॉर स्टार्ट हो गई तो सारी सेक्टर्स पे इम्पैक्ट होगा, और ऑटो सिर्फ एक्सक्लूसिव नहीं रहेगा. Let's hope nothing of that sort happens, because we already have a war going on in Russia and Ukraine, and that has severely impacted the economy, not just those two economies but worldwide. So I think domestic demand is something which is going to get affected very immediately. And given that what is happening in China with the COVID situation, it's not going to be good for the global growth. So yeah, I mean, we'll hopefully have very less of retaliatory measures by Beijing or China.
All right. Saurabh, you've been promoted to speaker. Yeah, we can hear you. Go ahead.
I just want to ask about that, whether the one-way move of Nifty. What are your views? Like, we have been seeing a rally from uh, almost few weeks. It has been just one-way move. And my second question is on uh, whether the monetary policy that RBI is coming up with, if the rate hike is not as per expectation, do you expect some kind of reversal in near future?
So I think I answered that in the initial part of the spaces. So 1 month ago or 5-6 weeks ago, there was a lot of pessimism in the market. Now there is a lot of optimism in the market. So the pendulum has swung in the opposite way. So we have to find an equilibrium. I think the equilibrium will come probably in the next week or so. As far as the RBI is concerned, I think they are going to do a rate hike. Whether the quantum is going to be 25-30 basis point, or maybe more towards 50 basis point, that we have to see. But market should not be too worried about the rate hike. That is mostly priced in after the Fed raised rates by 75 basis points. So I think the valuations have inched above the fair value zone, and the external environment hasn't really changed. So that is a little bit of a worry in the short term. That we have rallied almost 12-13% from the bottom from mid June, and we have rallied very fast. So that equilibrium, when it comes back, that could be a little bit painful, especially for the short term traders. But I believe that the stocks which are going to deliver the earnings, they are going to be rewarded in a disproportionate manner.
Superb. On that note, I think, Amit, we have taken more time than we had blocked on your calendar. So thank you so much for staying on for a little longer. And a big thank you to all of you who have joined in, dropped in a message, volunteered to come in on the conversation. It's been great to have you. And quick reminder, we are here every Wednesday at 7 p.m. trying to make sense of the markets. And we have guests who are coming in, joining in. And of course, we have you being a part of this conversation. So big thank you to Amit for joining us, Amit Kumar Gupta. He's the founder of FinTech Capital. Don't forget to follow Amit and FinTech on Twitter to learn more about how they think when it comes to the bosses. And of course, follow Stock Plus India and Business Insider India. And we look forward to coming back to you. And we should be back tomorrow evening, where we're going to be talking about all things Web3 with a little more love to cryptocurrencies and NFTs to try and make sense of what's happening there. So that's happening tomorrow evening. So you'll have Yashmi and Rahul Sanghi who are going to be plugging in. So that's tomorrow evening. But this is a wrap for this evening. So once again, thanks a ton, Amit. Really appreciate you joining us. And on behalf of Stock Plus India and Business Insider India, you guys have a great week ahead, and we'll catch you back soon.
Yeah. Thank you, Yash.
Thank you so much,
Yash.
guys.
Pleasure having you.